Hello friends, I am Ankit and welcome to my channel. Big day today for indices and commodities, and we will be looking forward to a volatile US30 and US100 movement along with gold as well. So what is going to happen? We will try to see with the help of candlestick charts and indicators. Let's try to find out what the charts are speaking. Do not forget to like, share, subscribe and comment. Let's start the day with gold first. See, this is on the 2-hour charts. Gold is trying to give you lower highs and it is failing to go past by 1870 1872 zone, which is going to be a very critical resistance. I had told you this in early morning and yesterday also that once it is above 1872, go long there and one can expect 1878, and below beyond that one can expect 1881 91 levels also. I will maintain the same, and yes, at the same time higher lows indicating that it is probably looking for a breakout. Yes, it is failing to go past by 1860 zone, which is going to be a fairly strong support zone. So don't trade between 1860 and 72. Once again the same call. If you look at the stochastic, this is near to overbought. If you look at the MACD, this is running parallel and still in bullish zone, indicating that probably there is still a room for it to rise. And if you look at the 3-hour chart, similarly on the 3-hour charts, you will find, see, higher lows, lower highs, consolidating in between this 1872 critical resistance, 1860 critical support. Only once it trades out beyond any of these, one can take a position. And yes, below 1860 we can expect it to head towards 1845, 1836, 1830 and below levels also, very much possible. And if you look at the 3-hour stochastic, this is still in buy side, still bullish. MACD has crossed over and trading in green. It is wide and divergent. And if you look at the RSI, here is near to comfort zone, not indicating anything. And look at the 4-hour charts now. On the 4-hour chart, see, it is trying to create a base. That is what it is visible, 1860 the first base. Now it is trying to create it around 1863-64 zone. With this it is trying to rise. However, the problem statement here is it is failing to go past the critical resistance zone. So yes, it is trying to create a support, however failing to go past. The bulls are not trying to take the control out there. But yes, once you see it above 1872, go long for 1878, which is going to be a very strong resistance. 1881 and then 1891 it will strike directly. In fact, it can go well beyond 1900 1910 levels also. So take your positions accordingly. Now look at this, the 4-hour stochastic was also at comfort zone and still trading in sell. However, there is a possible crossover here. If we get couple more red candles, it will enter into bullish zone and it will try to go overbought again. Now look at the MACD, it has just crossed over, only 3 candles and it is widening. Probably a sharp red candle will try to take it or make it diverge again. So I'll be cautious with the shorts here till the time it remains above 1860 levels. And look at the daily charts here. See, on the daily charts, previous candle lower lows, and yes, the highs are here at very much at 1880 levels, the resistance here at 1900. Now look at this, once you see it trading above 1878 and 1881, you will gold will directly lend towards 1891 1905 levels. Remember, beyond 1872 one can remain long. Also look at this, at the same time one must not forget, it may try to achieve a double top and then try to achieve lower lows. This is also very much possible that it can try to hit 1844 1845 zone, which is going to be a fairly strong resistance zone. Look, this is also the bottom of the Bollinger Bands out there, and we have seen all the candles almost getting the it is getting pushed back from there. So for the day itself, 1843-42 zone may provide a very strong resistance for it for any further drop. But if it continues, we may see a equal size of red candle, that is almost 40 points. So I'll be cautious here. And considering this, let me summarize for the day. If you see it trading above 1872, go long for 1878 and 1881. These two levels are going to be fairly strong resistance. Beyond 1881, we can expect that it is going to hit 1891, 1897, 1900 and then 1910 can also be expected. Also on the downside, once it breaks below 1858, we can see a sharper fall. Once it is below 1860, you can go short. 1858 nearest resistance, 1855, 1850 and then it will directly lend towards 1840 442 zone. Probably it may try to get a support there. Below that we can expect that it is going to head towards 1830 levels. So take your positions accordingly. Now let's have a look at Nasdaq 100. See, very much visible that there is a wall out there now at 13150, which Nasdaq 100 is failing to go pass by. So yes, again, and at the same time there is a stronger support at 13080 levels. As I told in my morning analysis, do not trade between 13160 to 13080, and beyond that, yes, beyond 13080 you can expect that it is going to drop further. See, it is getting a very strong resistance, failing to go past by this zone, and indicating that bulls are not trying to take a driving seat here and probably looking forward to a drop. That is what is expected here. Look at the 2 hour stochastic, almost running flat, now looking downwards, and that is why the candle is red. And you can see the MACD is trying to converge and crossover, probably indicating that there is little bearishness. RSI running flat, now looking downwards here. And if we look at the 3 hour charts, similarly on the 3 hour charts, there is a clear cut wall out there which it is failing to go past by. That is why I told you in the morning. But you can you see there is a little slope which is sloping upwards. Now it has got fairly strong support at 13080. So don't trade between 13080 and 13160 levels. Above and below you can take your positions accordingly. However, trade strictly with a stop loss and put always your stop loss at cost. Now look at this. This is a stochastic looking downwards from here, indicating a little bearishness, but it can converge anytime. Look at the RSI running flat, running parallel, but it's still in green, and our MACD, that was RSI, is also similarly running flat, running parallel. And if you look at the 4 hour charts, similarly on the 4 hour charts, waiting for a breakout, consolidating here in between 13,000 to 13,150, 160 levels. Once it breaks beyond this, only you can expect that it may give a clear cut direction, clear cut move, which might try to take it towards 13,300, 13,400 and 13,500 levels. At the same time, on the downside, below 13,000, 12,800 and below levels can be expected. 4 hour stochastic near to overbought, however running flat. MACD is also running flat, RSI is also running flat out there. We can see this is a result and outcome of the flatter candles we are looking forward to. Now coming back to the daily charts here. On the daily charts, see couple of observations. I told you, see the body size here, body size of the candles diminishing in size, indicating that bulls are not willing to take control. Bulls are not willing to take charge of the situation here, probably indicating that once it starts to drop, we may see a sharper fall, and this time the fall is going to be sharper enough, which might try to take it towards 12,600 levels. So trade with caution. Once you see it below 13,080, you can remain short. Let it reverse, let it bounce back. Only if it crosses 13,200 you can close the position. So almost 140 points at stake, and that is why you can take your positions accordingly. And yes, above 13,160 you can go long. Clearly it is trying to rise, then that it may try to give you a sharper green candle, which will try to take it towards 13,500 levels. Why I am saying so that a greener candle can be expected? Because see, most of the markets, what will happen is, yes, everybody knows that there is going to be interest rate hike, and that was given the expectation. 0.5% is the hike which is expected out, and most of this is already accommodated in the last few days when the drop was sharp and the decline we have seen already. But at the same time, now from here markets may give a relief really, that okay boss, the drop is already taken care of, and now let's bounce back. Now let's try to back in track, let's try to come back in track again, and it may try to trap again the retailers trying to go on the bull side, probably, which might take it towards 13,500, 600 level, and then a drop from there can be expected. This is also one of the possibilities which I am looking forward to. So trade with caution. And if you look at the daily stochastic, looking upwards here, and hence, yes, if it drops I won't mind, and if it rises I won't mind. Now look at this, MACD trying to converge and cross over. A sharper green candle will make it on the greener side again. So considering this, let me give you the trading levels for the day. See, as I said, one can go long at 13,160. Beyond this, the target is 13,200. This is going to be a fairly strong resistance. Then 13,300. And beyond that 13,440 levels and 13,500 will come into picture. it can rise till there. Anything is possible. We have seen the markets drop like anything, and we can see a rally which might be of 400 500 points. That is also very much possible, as most of the drop is already accommodated. However, last 2 days rise can be considered as a little retracement, and the drop can be also equally expected today. See, this is the beauty of the market. It doesn't give you a clear cut direction most of the times, and most of the times, yes, it gives you a clear signal also. Let's see what is the case today. And yes, you can go short today at 13080. Here two levels which we have to watch out for: 13040 and 13000. Now below this it will directly lend towards 12950, 12900, 12800. These levels can be seen. Beyond this we can expect 12650, 12570 and 12500. It can drop till there also. It is going to be a wild volatile day. Trade with caution. Probably right now it is appearing to be bearish. It can go till towards 12900 if it drops below the Fed. And yes, with the Fed also it tries to drop again, there could be a bounce back. So trade with caution, trade with strict stop loss there. Now let's have a look at US30. Now look at US30. It is trying to give you a probable red candle from here, and this time this is going to be a sharp bearish candle. That is what can be seen. If it breaks below this zone at 33,140 levels, probably we can expect a sharper drop which might try to take it towards 33,000 and below levels. Right now it is trading in a fairly narrow zone between 33,150 to 33,300 levels and 33,280 levels. So I'll be cautious in between this zone, and any breakout above or below will be a good indication to go long or short. And you can see the 2-hour stochastic looking downwards just because we had a red candle before this. MACD running parallel and not showing any signs. RSI also running flat. And if you look at the 3-hour charts, 3-hour charts too similarly consolidating here almost. See, these many candles and it is consolidating, rather I can say these many candles, and US30 is not showing any signs of any real move despite a breakout and then a rise. So yes, 33,400 levels clearly giving it a resistance. At the same time 33,000 and 32,900 levels fairly giving it a very strong support. So I'll be cautious in between these 400 points. See, the result of this is we can see RSI running flat there, MACD is running parallel there, and stochastic and MACD and RSI, all of them running flat out there. And if you look at the 4-hour chart, similar is the observation. Two red candles. Only once it breaks this zone at 33,100, I'll recommend you to go short. And yes, beyond 33,300 you can take a long entry also, beyond which 33,400 can be expected. Then 33,600 700 zone can be expected. This is what we can see here. 4-hour stochastic almost at comfort zone looking upwards. MACD white divergent and still in green. RSI running flat there. And if you look at the daily candle, now look at the daily candles. See, it is trying to trade in this zone, this channel. The support here at 33,100 levels clearly there, very strong support. 33,140 100 levels. Above this, the high of the channel is at around 33,700. 33,700 rather I will say. First target is at around 33,550, and then 33,700 levels can be seen. The channel high is at around 33,550 though, but yes, on the upside 33,700 can also be expected if it continues to trade above 33,100, 33,140 levels. On the downside, if it breaks below 33,000, then only one can go short. Then also 32,900 must provide a support. Below that we can see a sharper drop. We can see a sharp red candle below 32,900 levels, where 32,700, 32,500 can be expected. The stochastic here is looking upwards, looking in green. It was trading oversold. MACD trying to converge here and probably may see a green candle on the daily chart, and that is why I say relief rally on Nasdaq or US30 can be expected, where the markets tend to counter the move, because retailers to trap the retailers, simply as we have already seen a good drop in past few days. Yes, today can be a greener day where it might try to go bullish and trap the retailers for next couple of days, following with a drop early next week. That is what can be a probable expectation today itself. Considering this, let me give you the trading levels for the day. So go long at 33,300 till the time it is below 33,300. I will not recommend you to go long. Beyond that, 33,400 nearest resistance, 33,550 next support, and then 33,600 till here. It is fine. It can try to achieve then 33,720 and 33,800. It can rise till here and it can rise beyond levels also. There could be a sharp rally if it continues to rise. Sky is the limit on the upside. Similarly, on the downside, I will recommend you to go short right now at around 33,100 levels. If you see it trading below 33,100, you can go short. The target is 33,000, 32,950 and 32,900 levels. Here it is going to get a stronger support. Below this, we may see it coming towards 32,720 and then towards 32,600, and then below that we may see it coming back to 32,450 also. While volatile day, trade with stop loss, trade with strict stop loss. Always shift your stop loss to cost. Don't rather trade. If you don't trade one day, don't think that it is a day where you will get free money. It will take your all money. So better to avoid trade and just watch. That is also the best strategy to preserve your capital. Else, call is yours. Trade strictly with stop loss and shift your stop loss to cost every time. Do not forget to like, share, subscribe and comment. Do not forget to join my Telegram channel. Reach out to me for any of your trading or training related queries. My email ID and Telegram ID are mentioned in the channel and video description. You can be part of my next mentorship batch starting 9th of May, and you can be part of my VIP signals group, where just by trading with the help of signals you can make daily profit. Thank you very much. Have a great profitable trading day. Thank you.